What's up, folks? It's Josh here from Nobel Trading, and today we're going to do the long-awaited earnings play video. I posted this on social media. It led to a lot of growth in the server. It got a lot of people's attention. And I'm just going to be very clear. I like to post these to get your guys' attention, to lure you in with the spectacle of 1,000% returns. And then I try to teach more solid fundamental things. So I'm just going to be very open and honest with you. That's my game. That's what I've been playing. I know what gets people's attention, but then once I have your attention, I want to teach you solid things that actually work, that will lead to long-term success. So how did I do this, though? And how did I consistently do this? And this is just one of the ones we shared. There's still lots of other earnings. We made like 500% shorting Roku. I think it was like a 200 or 300% plays that we also did. This one in particular was really good. So I'm going to go ahead and actually like break down what went into the planning for these and how I can consistently make money on these earnings calls. So let's first of all cover this. I've been doing this for years and years, right? And I know the common teaching is never play earnings calls. And there's some validity to that, all right? Let's also acknowledge that there is some validity to that. Especially if you're playing options. And I'm not going to go over complex option stuff. We have the whole section of the Discord, which actually I'm going to go ahead and transition to that. So if I go down here and I go, actually, where did I even put the option stuff? Holy cow. I built this. You'd think I'd remember where everything is right at the top of my head. All right, so one of the big things we want to keep in mind here is this, Vega. A lot of the reasons people say don't play earnings is because of this right here. The volatility of the stock will build into the earnings call, and then if you don't get enough movement from the earnings, the option won't print well. And this is one of the main reasons people say do not play earnings calls. You can't expect what's going to happen. Now, I'm just going to be honest with you. A lot of that's loser's bias. As someone who's been doing this for years and years, nearly a decade, there's 25 companies I follow extensively. I know what these companies do. I know all their subsidiaries. I know their management team. I know the lawsuits that have gone through. I know the products they make. I know the partnerships they have. I know these things inside and out. If you follow a company that extensively and you want to take a small portion of money, because keep in mind on that last earnings, on that option I played, you got to look at how much I spent on each contract. You know, if you go through here and you look at this, see, that's 1,000%. So I actually only spent like $36 on each contract. It's not a lot, right? So you can really control how much you also put at risk. That's the other really important thing. So this is why I can make these earnings calls, though, and why most people say don't. Because most people are just like, ooh, an earnings play is coming up, and I think this will happen. But they don't actually follow the company for years. They don't actually know. They never actually even listen to the earnings call most of the time. I mean, because most of the time you see people go for these wild bets. It's on Wall Street bets or something. And they're just being degenerates. And knowingly being degenerates, you got to give them credit for that, I guess. But this is one of the fundamental things. Actually follow the company, know what's going on. All right, so let me go ahead and break down like what I did and the trade setup for Activision. So this is their graph that we're looking at now. This is the earnings that I shorted. And I did one-sided on this one. Now, for some of these earnings, you can play both sides. You can play calls and puts. Now, when you want to be doing that is you want to do a historical analysis. So if I like pulled out to like a 3-year graph, I could look at the earnings plays. Now, you don't have to do it this way. You can also do a scanner if you want to do that. If you want to use like FinViz or maybe even TrendSpider has a different way to look up the historical averages for movements on the stocks. That's really effective as well. But what you want to look for is, does this stock tend to have big movements on earnings? Now, you can see here for Activision, not really. Nothing like this drama, right? You don't see that drama in the past. So So since that doesn't meet the parameters, what was it about this that made me short it and do a one-sided short? And let me just reiterate real quick. if you do, like, let's say you're looking at a stock like Snapchat, that actually historically tends to always have big movements on earnings. I think its average is probably like, maybe it's adjusted. I want to say it's like 8% average move either way. So if you straddle something like that, you might get enough movement to negate that volatility drop off, that vega, and then you'll still make money on the contracts. Because what usually happens is it just go to zero because you lose all that volatility, you lose all that momentum, and then the stock barely moves. Even if it moves in the direction you want, you don't make money. Okay? So back to where we are right here for Activision. There's several things, and a lot of this, none of this, I know everyone's got an obsession with technical analysis. This play was purely fundamentals. So right about here, we had several massive lawsuits against the company. Now, here's the thing, is that for these gaming industries, especially, some of the worst management teams like in the country, by far some of the worst management teams in business are in the gaming industry. I mean, it's egregious what these people get away with, and it's egregious what gamers will support. They don't really care. They just want to play games. They don't. You can do all kinds of awful stuff. So one of the employees actually committed suicide because working conditions were so bad. And I guess I won't get into details of how messed up it was, but that was just one of the many allegations that were leveraged against the management team at this company. Now tell me something. Is a company functioning well in their day-to-day activities? Does it sound like lots of productivity is happening if they're getting lawsuits consistently over how bad things are? No, that is call for all sorts of concern. Be very worried. This is one of the things that I'm like, I don't know about this. So the stock sells off, right? We get this big sell-off. I actually kind of was shorting it very casually on the way down, just because, and then here, you saw a slight rebound. But this is important because after this, China came with the crackdowns. And China said, now gamers under, I think it was like under the age of, I think starting, well, I think for everyone they were restricting gaming, but for kids especially who have the most time to game, by the way, are going to be restricted for the hours they can play, how long they can play. It will literally kick them off the game. Okay, it's now programmed into technology. These companies, what's built, so all these companies are forward-looking. Remember that? So they're anticipating a certain level of growth quarter over quarter, and what matters on these earnings calls is almost always going to be the guidance. Now, sometimes you get a knee-jerk reaction to a great earnings blown out, and then mediocre guidance, and then people will buy in anyways. That's so rare. Usually, every single time there's an earnings report, what the market's looking for is the forward-looking guidance. Like, will you continue to do well? What does the future hold? What are the new things you're planning out? And one of the things that I didn't think occurred properly throughout this time period, because look, we're mostly just flat, right? China just took away your fastest growing market. They didn't take it away, but they blunted it hardcore. I mean, literally the president of China was saying things like video games are the opioid of the soul. If you don't know how China treated opioids, you don't want to ask the drug dealers because they're all dead. So they take that type of claim extremely seriously. And so I didn't think that was priced in the stock. I also didn't think that management team couldn't possibly be functioning okay, because at the end of the day, people matter more than money. People and policies, people make policies, people make governments, and so I tie that into the political sphere. Is people matter more than money. I'm going to follow people, I'm going to do the fundamental analysis, and then do my technical analysis. There is no technical support for a move like this, though, right? So when you make an earnings play, it better be based off fundamentals. It better be based off a company you've been following for a while, and you better have enough information to back that up on why that could occur. Okay, and so for this one in particular, I said, I don't think the market is priced in appropriately how much China is going to blunt their future growth because of how much they're cracking down on gaming. And on top of that, gaming in the U.S. is very mediocre. It's not, there's cultures all over the world where it's more acceptable. It's not like this nerdy thing. It's more of like, it's more common, and it's more like their football. Okay, they don't have a football or Super Bowl. They have esports. Esports is a bigger thing in other countries. So in other countries, the ones who actually support this stuff more, start slamming down on it, you have to pay attention to that. And so I set up the call. Now, the technicals of actually setting it to play. You got all the fundamentals. You kind of work it out. You do the math in your head, I guess, and then you want to set up the actual option play. So here's one of the things you have to recognize, and we'll go ahead and bring up a current. This was I'm not pulling up old options. I'm just going to pull over some forward-looking options. Let's say, for example, I was looking to buy some contracts for an earnings that was in December. Okay, let's say it was December 10th, actually. And I want to anticipate a large move in the stock on the downside, like I did. Okay, so I'm actually going to be looking to buy contracts most likely out in February. Now, one of the things I'm going to also do is I'm going to go click this option, or I'm sorry, the volume and open interest, because I want to make sure that there's actually going to be open interest in whatever contracts I buy. Because here's one of the things I'm going to do. I'm going to buy really far out of the money. Now, this isn't going to be a full options class, but out of the money means if the stock's sitting at 62.20, I'm actually going to buy a put that's probably more like $40. The strike is at a $40, anticipating a $20 move in the stock. And as you can see, the open interest can really die down on some of these. So when you're picking out what strike you want to buy, you want to make sure there's actually going to potentially be some buyers. Now, one of the other things I'm anticipating is that there'll be a large jump in the open interest of these contracts, because I'm anticipating that when the stock moves big, people will move to these strikes. So yes, sometimes I'll buy over the open interest, but you need to be careful with that. You know, if there's interest in 6 contracts and you buy 6,000, you might be pushing the limit a little bit. Okay, so that's the one thing you want to look for. Now, why am I going so far out on these? One, because when you get a big swing on a earnings, usually it's the development of a new trend, and you can actually ride that trend for a bit. Let's say it didn't go to 1,000, but it went to 200%, and then I'm like, well, I have another month on it. I could probably let that ride a little bit because we're going to probably enter a new trend. And how would that have played out actually if I had done that? You could see we had the big drop, came back up a little bit, but then boom, we're back down. And that's all within, that's just 15 days right there. So there's that trend. So, and that's not a unique thing that usually occurs. Even from here, we had this beginning trend. You can see how long trends last. All right. When a new trend begins, you're in that trend. So for a minute, you're going to need some sort of catalyst to break you out of that. And this is more aggressive than just some sort of what you might call a consolidation phase. So, and I'm deviating a little bit. Let's hop back over here. So, you want to watch for that open interest. You want to make sure that there's actually going to be buyers for it. And the other thing you want to check on is why we're going so far out. If I pull up here and let's say we're on the 10th, let's say I just wanted to go for some weeklies. What's going to happen with these? Well, first of all, see how bad this open interest, the open interest is holding up pretty well on this one in particular. That might be because of stock's so volatile right now and actually running up. Typically what you're going to see here when you look at these is you're going to see that the vega is going to be higher the closer you are, and the further out you go, the less it's going to be. So if you go further out, instead of a 0.06, I got this nice 0.02 or 0.03. I enjoy that more. It's a less effect on the stock. I also then have this theta not breathing down my neck and causing me all sorts of problems because we're going to have plenty of time on the stock. If you only have a few days left and then you're trying to play the resulting trend after the earnings call, but then theta's murdering your contracts every day, you can also run into some issues. And so giving the time for a new trend to play out, giving it time to reach a really far out the money position, anticipating a big movement in the stock is how, you spend $37 on this, but then you get $300 back. And also keep in mind the true secret to these earnings calls and this is just a brief rundown, I guess. And keep in mind, I call all these out in the Discord. These aren't just I know I'm using a backtracked example. I try to go through and look at through any upcoming earnings that I was feeling especially confident on. We're actually near the end of the season, so maybe leading into beginning next year when we're starting to enter another earnings season, maybe I'll do another video and then actually do a rundown of a play before I do it. I just felt like this in particular was a great example, not because it worked out so well, but because the fundamentals were so strong and apparent. And I was very adamant about this play before I went for it, by the way, because just a reminder, link in the description down below. By the way, please subscribe and like the video. That would help so much. I know a lot of people will probably be drawn to this because they're wanting to learn, how I did this, and this has been, one of the more anticipated content that people have been wanting to see. So please support and also join the Discord to get more content like this. And I think on the next time I'll try to do maybe next no promises on that though, because I try to put most of the content in the Discord. So maybe in the future we'll do another earnings call. I think right now what we've been mostly doing is playing these retail stocks. Actually, yeah, we have an earnings play coming up on Gap on GPS, and if you hop in the Discord, maybe I'll do a private video for Contender subscribers in the Discord and teach them a little bit about the upcoming Gap play. Let's do that. I just decided that right on the spot. Boom, we're Gary V'ing it all live. Link in the bio. Check it out. Please like, subscribe, favorite. I don't even think that does anything for us. Okay. Thank you all for watching. I hope you found this helpful. My name's Josh. Enjoy the rest of your wonderful Monday, folks.